going on, guys? Welcome back to my channel. For those who are new, my name is Handsome Kelly. I am a full-time day trader. I also coach other individuals how to become 5- and 6-figure traders themselves, as well as how to utilize their credit to build wealth. So if that sounds like you, great. You're gonna love this video. And if that does not sound like you, and you know someone who that does sound like, share this video with them and they're gonna love this video as well. Now I'm starting a little series, and you guys know that I love to simplify the markets. So the series is going to be called Trading Simplified. Now during this series, I'm going to be, again, simplifying the market so I can show you guys a better understanding of different trading techniques, as well as how you can utilize that and make it more beneficial for your trading journey. For today's episode, I'll be breaking down trend lines. Now I see a lot of traders, they use trend lines, but they don't really use them correctly. So again, I'm going to break it down so you can have a better understanding how to go about utilizing it so you can help yourself out along your trading journey. So let's get into it. All right, guys, now I don't want this video to be too long. However, there are a few points that I do want to go over. So I just want to make sure that I tackle those points for you. And by me tackling them, you're going to have a better understanding of what these trend lines are, exactly how to go about utilizing them. So for starters, when it comes down to actually pulling out the trend line tool, what you're going to do is you're going to come on TradingView, you're going to come to your left side toolbar section, and you're going to click on the second tool. Now this second tool right here is where all your lines are going to be at, right? You have your trend line, your hour, your ray, info line, and so forth. I'm not going to get into every single line that's available, but we're just going to focus on trend lines. So this, guys, is where you're going to actually pull out your trend line tool. So as you guys can see, you have the trend line tool there. Now, besides that, you do need to understand that what trend lines are diagonal support resistance in the market. Now, they're diagonal because, again, you have horizontal support resistance as well, right? Which would be, more so of this, right? Your horizontal ones. Now, when it boils down to it, horizontal support resistance is going to hold more value than your diagonal support resistance, which are your trend lines. So that's needed for you to understand. The reason why we utilize trend lines is because they help you to identify the type of trend that's going on, as well as to help you get back into a trade. Now, as you guys are aware, right, we have, I'll start with this. We have uptrends, right? We have higher highs, higher lows, higher highs, higher lows, and so forth, right? There's an uptrend. Now, with the uptrend, we need to identify the type of trend that's going on. Now, with this, what you're going to do is you're going to pull out your trend line tool, and you're going to pull it. I'm going to draw it up on a market here. I'm just going to use an example real quick to break everything down to show you the different type of trend lines that there are. Right? So you have ascending trend lines, you have descending trend lines. Now, ascending trend lines are used more so of an uptrend. Why? Because price is what? Ascending, right? The name kind of gives it away. Ascending trend line. So with an ascending trend line, you're going to draw it from the base of the actual market. Right, you're not going to draw from above. That's with a channel. We're not going to that right now. I don't want to confuse you guys. So you're going to draw with the base of the market. The reason why you're going to draw with the base is because, again, as I just said, trend lines, they're going to help you to identify a trend as well as help you get back into a trade. So with an uptrend, to get back into a trade, you need to look for pullbacks in the market. Now, pullbacks in the market with the uptrend, right? We have, I got time to do this. Let me do this real quick. Come on, click. There we go. High, and high, low. All right, so let's just do this real quick. I'm gonna lower this to 28. Yes, that's fine. High, low. I'll lower this to 28 as well. All right, so as I just said, you need pullbacks in the market. So with the uptrend, the high or low will be considered your pullback. So when you have this high or low come about, that's where your trend line will connect to. So obviously this is not drawn to scale. That's the reason why it's not connecting that way. But I'm going to show you guys in this example when I actually go in the market. All right, so that's for an uptrend. Now, however, on a downtrend, it's going to be the opposite, right? So with downtrend, you have a lower lows, lower highs, lower lows, lower highs, and so forth. Right, same exact thing. With the downtrend, price is going down, which means price is descending. So with the descending trend line, you're going to draw from the top of a trend line and it's going to go down. And the reason why you're going to do that from the top and not the base is because, again, price is going down and a trend line is used to identify a trend line is used to help you get back into the trade as well as identify what the trend is. Now with the downtrend, The way for you to get back into the trade is to wait for a lower high to appear. All right, so in this example, let me just pull this up real quick. Come on. There we go. A low and lower high. The low, lower high. High. Oops. That's annoying. Trying to speed this up. All right, now with this, with the downtrend, the lower highs are the pullbacks in the market. Now, as I just said, with these pullbacks, it's going to help you to get back into the trade because again, it's a pullback, and these pullbacks are needed to help you go about doing that. So again, as I just said, guys, when it comes to an uptrend, you're going to have an ascending trend line, which means price is going to be drawn on below the market or the support of the market. And then you have a descending trend line in which price is drawn at the resistance of a market. So both examples, again, these are, as I just said, diagonal support resistance. However, remember that horizontal support resistance is just going to hold more value when it comes about doing so. All right. So now, when it comes to about knowing when to start your actual trend line, it's going to be pullbacks in the market, yes. However, what I like to do and what I think makes the most sense, again, is different traders have different ways of going about doing so. I'm going to show you why this way makes the most sense. So I like to start trend lines with pullbacks in the market with point of failures. And these point of failures are wicks. The reason why I like to use wicks is because of the fact that wicks hold value. So a lot of people like to ignore wicks and they use the actual candle close. However, as I just said, wicks hold value, right? So on a lower time frame, wicks are still movement of price. So because of movement of price, that's just something that you just can't ignore. So another thing as well, you do want to make sure that your trend line is accurate as much as possible. So what I like to do is as this. Even if it's close to it, right? Because let's say you start a trend line like that, it could be close to it, but it's not exactly on the top of the wick. So what you want to do is just click on the magnet tool, click it once, right? And then what you're going to do is just move the trend line over it. And as you move it over, as you guys can see, it's going to literally the base of those wicks. I'm not the base, the high of the wicks. So you're going to move it onto it and then just take it back off. And once you take it off, now you can actually draw your trend lines. So what you want to do as well, as I just said, trend lines are used for pullbacks in the market, which is your lower highs. So in a downtrend, we're going to look for pullbacks in the market. So a pullback in the market would be, I'm going to use this one right here. I'll extend it. Right. So these are pullbacks in the market. As you guys can see, this is the start of my trend line. Right. We came to this second point, which is a pullback in the market. You see, you have this one here. You have this one. And then you also have this one to the future. And then if I continue dragging it, you guys can see we have a break of the trend line. But before we actually break that down, let's go to how you actually went about drawing this. Now, as I just said, you're going to look for pullbacks in the market. However, you also want to be alert that a true trend line that's actually accurate, it doesn't cut through price. So a true trend line, the first 2 points doesn't cut through price. Everything else is fair game, right? So in this one right here, this trend line is accurate. Why? Because if you guys can see, this is the first point, and this right here is the second point, right? The trend line doesn't cut through price. Now, if I was to have, let's say if I had, let's do this. All right, let's do this. Let's do this. Our first point, and this right here is our second point. Right? This is inaccurate. Or even this one is our second point. No, there's going to exact on it. This is inaccurate. The reason why this is inaccurate is because the first 2 points, price cannot cut through. The trend line cannot cut through price. This trend line right here, it cut through price right here as well as right here. So again, as I just said, this would be invalid. So let's move it back because that's an invalid trend line. But again, so with the lower high, once you have a rejection of your trend line, that is going to be your entry. It's going to help you get back into it. And then with your rejection, your take profit can be your higher time frame support resistance, which is your regular. Let me put this back on. Which is your regular support resistance. This is not drawing the scale. I'm just drawing this out. But that'll be your take profit. But again, as I just said, it's needed to help you identify the trend as well as to get back into it with a pullback. So when you see a lower high, that's when you can pull your trend line tool out. You can utilize that second point, whatever that entry is, and then you can take it. Now, if you missed it, same exact thing. As price is coming back up to this trend line, when you have a rejection of a trend line, that right there, as I just said, is another entry that you can take. And again, your take profit would be a higher time frame support because why? Price is going down. And you guys already know, especially when it comes to market structure, after you have, when it comes to a downtrend, right? If you have a lower low, a lower high, what's next? A lower low, right? That's just market structure 101. Now, with this as well, you do want to be alert and understand that when it comes to trend lines, as I just said, it's going to help you to get back into the market. But also remember, too, that trend lines, just like horizontal support resistance, trend lines, which is diagonal support resistance, they do get weak. Now, with these getting weak, you think about it like this, right? If you hit glass over and over and over and over, it's going to get weak and it's eventually going to break. Same thing with a horizontal support resistance, right? If it rejects it over and over and over, it's going to break. And once you have a break of that, that horizontal support is now going to become a resistance, or that horizontal resistance is going to break and become support, and it's going to be starving of the broken structure and so forth, and so forth. So with this, as I'm showing you guys here, you guys can see the first point right here. You have the second point. You have your third point, right? You have your fourth point, which you guys can see price is getting weaker, right? Even this one, you have your first, second, third, fourth. That's your fifth point, right? Your fifth point of this trend line. It actually, as you guys see, the actual close of this candle is on that trend line, but it's showing that price getting weaker. And then after that, we have a break of this trend line. There's no retest here, just a full break, and price continue going up. So now this trend line will no longer be valid. Why? Because price continue moving forward. Now, however, in some situations in which you can have a break and retest, just like you have a break and retest of your horizontal support resistance, you can have the same exact thing with your trend line. Now, in that scenario, you want to adjust your trend line when your point of failure gets adjusted or it surpassed it, right? So in this example, if this is my first 2 points, as I see right here, right, I see that this trend line had, this wicks had broke it. If I want, I can adjust my trend line to this, and now this would now be my new second point. I can do that, right? You can do that on a downtrend or an uptrend, the same exact thing. I'm sorry, on a ascending trend line or a descending trend line, there's really no difference. But how you want to go about it, you want to make sure that's adjusted that way. Now, another thing when it comes down to when it comes down to an uptrend, which is ascending trend lines, there's really no difference, right? You want to look for point of failures in the market, which is long wicks. So let's say we have this wick drawn up here. I'll use this one. I'll just put it right there. Put the magnitude on. Now I can use this. I can use this one. It really doesn't matter. Whichever one I feel is best beneficial. However, now that the first point is there, which is what I'm going to use, I'm looking for pullbacks in the market, right? So if I extend this all the way to the future, and I'm looking for pullbacks, as you guys can see, right? This is my first touch to my trend line. This is my second touch, right? This right here. If I want to use that one, I'll show you guys how both these would be. That's more accurate. My first touch, my second touch, my third touch, right? It didn't cut through price. As you guys can clearly see, this trend line shown is accurate, right? So we have all these these higher lows, which is pullbacks in the uptrend. These are used as another entry to get back into the trade. So this could be an entry, 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 entry. And if I extend it to the future, which I'll just double tap on it, extend the right line. All right, I extend it to the future. As you guys can see, we have a break of this trend line, a retest, and then price started to consolidate a little bit, and then eventually we came back into it. So again, I didn't want to make this lesson too long, but again, guys, trend lines are needed, and they're going to help you to get back into a trade. It's going to help you to identify what the actual trend is. You have ascending trend lines, you have descending trend lines. Your first 2 touches shouldn't cut through price. And again, multiple rejections of a trend line, just like horizontal support resistance, those hold value, right? So you have multiple rejections of a trend line, is going to get weaker. So I want you guys to understand that as you go about trading this, and then utilize that, right? Because again, trend lines are useful. It's not just like it's not useful. It definitely is useful. You can use that to summarize this again, and I said this over and over. You can use that to help you get back into a trade. So if you missed an entry, pull your trend line out. Look for if you're in an uptrend, look for your higher lows. If you're in a downtrend, look for your lower highs. Use that to get back into the trade, and then your take profit will be your higher time frame support and resistance. All right, guys. Until the next video, take care.